Hello traders, in today's video, I'll be showing you how I select the right asset to trade and those factors I consider before placing a trade in the financial market. The first step here is don't trade everything you see. This is one of the biggest mistakes beginner traders make when they start trading in the financial market. They try to trade everything they see in the market. But as a beginner trader, you have to focus on just a few assets you understand very well. That focus helps you master their movements and you will build confidence over time. The second step is check market condition. You have to check the market condition to know if the market is ranging or trending. If you see something like this, this is an uptrending market. And this is a downtrending market. And the last one we have is sideways market. You have to know the market condition. Is the market ranging or trending? Now, the third step is pick chart that look clean. You have to pick the chart that look clean. Not all charts look clean. These three look clean, but there's another one that does not look clean. If you see something like this in the market with no specific direction, you have to avoid it by all means. So you have to avoid all this type of markets. You have to avoid this type of markets. It is called a choppy market with random price action. So you have to avoid this. So what are the things you have to consider before you now place your trade? Now, you have to consider market structure. That is the first thing you have to consider because market structure is the backbone of any technical analysis. You have to decide if the market is ranging or trending. The second one you have to consider is liquidity zone. Look for areas where stop hunts happen, usually around previous highs or lows. Avoid getting trapped. And the third one is confluence. Don't rely on one signal. Combine confirmation like Fibonacci, support or resistance, and break of structure. That will give you good confidence in the market. Now, this fourth one is news. Check the economic calendar before trading. Avoid big events like NFP or CPI that can cause sudden spikes. The fifth one is risk to reward. Make sure your setup over at least 1:2 or 1:3. If the profit isn't worth the risk, skip it. It is not a must that you take that particular trade. So skip it if the profit isn't worth the risk. So that is it, traders. Those are the simple steps I use to choose the right asset and filter my trades. Remember, trading isn't about doing more, it is about doing better. Be selective, stay patient, and let the chart speak. If you found this helpful, hit the like button, subscribe, and stay tuned because in the next video, I will show you exactly how I use market structure and Fibonacci to plan precise